What we're going to cover today, we'll start with a little bit of introduction, some background on early Amazon, the pillars it has now and its revenue sources, along with its jobs data. Then we'll move into acquisitions, its acquisition strategy, and its M&A style, which has been a little bit conservative. And then we'll take a look at the investments with its Alexa fund and its strategy in voice computing, as well as Amazon proper, and its newer forays into logistics and healthcare. And then we'll go to a patent analysis and take a look where it's patenting and putting R&D at work, and then also the trends in logistics patents and UAVs that we've seen cropping up. Then we'll turn to Amazon's initiatives by sector and look first at its core business in e-commerce, and then explore its new forays and possible new pillars that it's got in AI and voice. And then we'll wrap up with some final words on where the new and existing business will be going. So here's a quick table of contents if you want to flip forward. But here is some background on Amazon. First, Amazon started off as a humble Seattle-based internet bookstore. And Amazon's now grown into a propulsive force in at least 5 different giant industries. And that includes retail, logistics, consumer technology, cloud computing, and more recently, media and entertainment. And Jeff Bezos, the company's founder and longtime CEO, first hatched the idea while working on Wall Street and left D.E. Shaw & Co. To bootstrap the company as an internet bookstore with friends and family money as well as his own. But as a startup, what's interesting is that young Amazon first raised about $1 million in small checks from about 20 local angels. Small check sizes about between $30,000 and $50,000. And among those angels, Nick Hanauer, Eric Dillon, and Tom Alberg of Madrona were brought in as company advisors. And then finally, in 1996, Amazon sought outside investment from John Doerr of Kleiner Perkins, and in the only round before IPO, Kleiner invested $8 million at a $60 million valuation to get a 13% stake. Amazon went public then at a $382 million valuation, and 20 years later, as of last month, its stock price has ballooned 35,000%, and its market cap hovers around $419 billion. And from its inception, Bezos had this idea of Amazon being a long-term play, and he first articulated this vision that's guided by an obsession with customers in the first 1997 letter to shareholders, when he writes that we will continue to focus relentlessly on our customers. And this is echoed again in the most recent letter to shareholders that just came out last week, in which he says, staying in day one requires you to experiment patiently, accept failures, plant seeds, protect saplings, and double down when you see customer delight. A customer-obsessed culture best creates the conditions where all of that can happen. And this idea that things are at day one and things that are just getting started is one that's continued. So even then, he said that it was day one, and the idea of remaining day one, as in remaining dynamic and competitive, that the company needs to think of itself in this way and still be obsessive about the customer. Even though nowadays its customers and who it reaches has evolved. So more lately it's been serving developers in new B2B areas. But thinking about the customers and what they want is in Amazon DNA. And over the past 2 decades, the Seattle-based company has built an e-commerce centric business that now appears to be at a pretty serious inflection point. So in a recent interview, Bezos said that Amazon now rests on 3 pillars. There's Amazon Prime, which offers the membership for free shipping, as well as a bundle of pretty elite digital media products. There's Amazon Web Services, which seems to be leading the tech pack in the cloud computing space. And then there's Marketplace, which is its third-party seller business. And Amazon has mentioned that there are several new pillars that are in the works, but to ask them in 10 years on whether or not they panned out. But these future pillars might include AI and Amazon Studios, which is its original content studio, where it's making content for Prime Video. Now, all those pillars make pretty good sense, especially when you look at it at a revenue perspective. But obviously, those three pillars are seriously outweighed by the revenue share of its e-commerce business. But these are where, these pillars and services and web services and Prime, these are where Amazon extracts a flywheel. And actually, Bezos has mentioned this, saying that winning a Golden Globe helps us sell more shoes in a way that all this cycles back into the virtuous cycle of its e-commerce engine. But Amazon as a company is pretty difficult to get your head around because it's in so many different things. So to get an idea of what the company looks like, we took a look at the jobs data to get an idea of where it's adding human capital, and also just to finally understand the org structure and what it is in its current state. So as you can see from these open listings, it's really dominated by openings in AWS, which is Amazon Web Services, its cloud computing arm. The next biggest share went to fulfillment and operations, and all this within its logistics network. And there's some other new areas that you can see that I pointed out here with Amazon Robotics, Amazon Books, and Amazon Go, which is its new retail tech idea that it's putting out there. Those each with about 50 open positions, but some of those biggest ones that were surprising were the Alexa team and the devices team. Each of those represent about 5% of the open jobs right now, and definitely give an idea of where it's trying to put more resources. So moving into acquisitions and its M&A strategy. So Amazon as a buyer of companies has actually been way more active in recent times in a way that's actually pretty surprising. So it jumped back up in M&A and it tied its all-time record with 4 deals. And that last record was done in Q3 of 2015. And a lot of these new deals that it's done, especially last quarter and Q1 of 17, these are going to bolster AWS. So ThinkBox, Do.com, and Harvest AI, these are all probably going to be rolled into the developer ecosystem, or bolstering its cybersecurity and just making its cloud services richer. Souq is an interesting one. It's kind of like the Amazon of the Middle East. It's been described as, and definitely indicates some new interest. But as a company, compared to its peers, it's not as acquisitive. You can see here that historically the company has been kind of on the lower end compared to Google, Facebook, Apple. Facebook and Apple, for example, have done between like 8 and a dozen deals historically. This year, or in 2016 rather, Amazon did just 5 deals. But here's a list of all the biggest deals, and sometimes it does spend when it can justify a solid business case. Some of the biggest names here you might recognize: Zappos, Twitch, Kiva, among a bunch of others here. These are the biggest ones that we have publicly available price tags on. And what's kind of interesting is that Kiva Systems, for example, cuts operating costs in its fulfillment centers by 20%, and Kiva makes robotics, industrial warehouse robotics that will move around a shelf on top of its low kind of wheeled robotics casing. And then Twitch, which definitely seemed forward thinking at the time, it's still now fantastically popular and boasts pretty big area of revenue generation, and it also gave Amazon access to a pretty desirable demographic, and coincided with this pretty meteoric rise in competitive video gaming and the broadcast of esports. Now, Bezos has championed this concept of a dreamy business that Amazon wants to be and also wants to acquire. And you can see here that most of the deals in the previous slide definitely fit this mold of being value adds to Amazon's existing strategies and tactical aims. So you can see that Bezos is saying that these sorts of companies are very lovable, very durable, and have strong returns on capital. And in general, Amazon does shy away from chasing shiny things. The case of Twitch might have been an anomaly. It competed against Google and proved that it was willing to spend and compete on deals. But in pretty much all these other cases, especially with Kiva and Zappos and others, it's pretty consistent with Amazon's past acquisitions. And this is definitely echoed by analyst Nat Burgess, who has said that Amazon is a conservative buyer. They think long term and they don't get seduced by high flying valuations. Amazon is unlikely to overpay for a high flying, fully baked platform as the basis for the next dreamy business. They are more likely to fill gaps through smaller deals, which makes M&A less central to their strategy than it is to a company that expands to entirely new markets through acquisitions. But most interesting, I think, highlighted here is that Amazon moves much more carefully than its peers, relatively speaking. Maybe to Facebook and Google and Apple, it's just a little bit more conservative. Now, getting into some data on that, Amazon definitely favors early stage companies when it's acquiring. Its recent spree of acquisitions last quarter, in quarter 1 of 17, 3 of those 4 were early stage deals. So that includes ThinkBox, Do.com, and Harvest AI. Those were all early stage. And also, Souk, for what it's worth, was definitely marking a new area of geographic interest. You can see that from 2010 onward, the vast majority of the companies it acquired were based in the United States. So moving along into investments. Now, Amazon's been getting more active as an investor in recent years, but that's mainly because of the Alexa fund. So until 2015 or so, you can see it wasn't really much more active than it was in the dot-com era, and all the while it's definitely transformed itself since then to be a totally different company than it was when it was just a simple bookstore or DVD and music store. And if you take a look at where it compares to its peers here, it definitely falls somewhere in the middle as far as how active it is. If you factor in the Alexa fund, you can see it's definitely on an uptick in 2015 and 2016 at 18 and 15 deals combined. That outdoes Facebook and Google by a pretty large margin. Facebook and Apple by a rather large margin. You can see that those two companies definitely opt to do M&A instead of investing. Google, obviously the outlier, has made a ton of bets. So drilling into the Alexa fund. Now, again, the Alexa fund was a $100 million commitment to founding its first standalone corporate venture arm. And the Alexa fund specifically invests in voice technology and adjacent IoT tech that bolsters the ecosystem around its Echo line of voice computers. So historically, the Alexa fund's done just a deal or 2 a month, which is actually well below that of even Google's venture arm. So you can see if you click through to our older Google teardown, this is definitely at a pace well below that of Google Ventures. And actually Google Ventures began with the idea of being $100 million per year investment vehicle. So relatively speaking, this is much smaller. And so far, it's really been about bolstering this hardware ecosystem that it has with the Amazon Echo, with the Echo Dot, the Amazon Tap, all of these running the Alexa voice software on it. And actually has been a wild consumer hit. I think they have about over 5 million units of the Echo shipped now, and it's pretty much seems to be the leading platform for voice assistants right now. And you can see that nearly all of these investments, the 25 that it's done, have been around making the ecosystem just more valuable. So almost all of these have a feasible, imaginable integration into Alexa's smart home. So you can see with Rockio, connected sprinkler system, there's Tracker, Nucleus, PetNet, smart pet feeder. All of these things or for the most part, almost all of these things have been about making the integrations richer and just definitely add to the things you can do from your couch without having to pull out your smartphone. You can shout at Alexa to manage or give you updated data on. So moving into Amazon's corporate investments, right here it's been mostly about late stage deals. So you can see that from this chart looking at our investor analytics tab on our CB Insights platform, Amazon definitely favors the late stage and actually pretty large size deals, looking more like it's interested in growth and partnerships instead of really mining early stage companies and being a partner the whole way through. And actually, if you take a look at where the company is invested, you can see that it's definitely getting more diverse with where industry-wise it's placing bets. So if you look at 2011 through 2013, it's only invested in internet companies, whereas 2014 to present, you can see that there's now media, healthcare, automotive, and transportation. A lot of these new ideas also parallel Amazon's broader business initiatives with AWS and expanding its logistics network. And some interesting names that it's done deals with in the past include Grail, which we'll talk about further in a sec. There's Twilio, there's Yodel. Twilio integrates well and actually has a partnership with AWS, which allows communication platform as a service for developers to use. And Yodel expands its logistics strategy and know-how inside the United Kingdom. But Grail is a very curious deal for Amazon to have been a part in. You can see here it was betting alongside some really big health-minded CVCs, some corporate venture arms that are really focused on the space, like Bristol Myers Squibb, Celgene, Johnson & Johnson, Merck, and so on. And it's definitely a large deal with a $900 million Series B. The company itself is a spin-out from Illumina, and it uses blood testing to do gene sequencing in order to detect early cancers. Now, what's curious about this is that genomics is a very compute-heavy practice. So, as you can see, Amazon or AWS Health has already had Illumina featured as a customer story, and the business of sequencing and finding genomic insights from the complexities of DNA. This takes a lot of computing power, and it could really parlay well with Amazon's AWS infrastructure that's already existing. But also, healthcare is currently one of the hottest areas for AI startups right now. And as AI increasingly becomes applied to healthcare and genomics, Amazon wants to be well positioned for it. And actually, Bezos himself has put words to this idea of customers using AI services and to accomplish complicated tasks like this. So he said in actually his latest letter to shareholders last week, quote, "Using our prepackaged versions of popular deep learning frameworks, customers are already developing powerful systems ranging everywhere from early disease detection to increasing crop yields." And this is a very powerful and well-articulated vision for Amazon providing AI services as a customer and company focus. And it's definitely a powerful vision that we'll explore later on when we get into its AI strategy. So taking a look at the patents that Amazon has done, Amazon actually originally got a huge leg up with its early patents and its intellectual property. And one that you might even recognize is with one click. So the idea of being able to buy with one click without and using saved credentials and shipping and credit card information. This is only available for Amazon's checkout. All others would be infringing on Amazon's patent. And actually, it's kind of created some controversy in Amazon's early life. If you read The Everything Store by Brad Stone, you'll see that critics charged that the idea behind one click was rudimentary and that that its approval by the U.S. patent system was a symptom of lazy bureaucracy. But Amazon actually enforced its IP and sued Barnes & Noble for infringing on the patent in 1999. And it won a preliminary ruling that forced the booksellers to add an extra step to its checkout process. So pretty much everybody in the e-commerce world has to do this extra checkout process, whereas Amazon gets to enjoy its one-click patent. But the patent actually expires this year, and competitors like Google and others are planning to, weave in and cut down on that friction to buying stuff. But Amazon's patent activity has also soared. In 2009, it had not even 250 patents applied for, and if you look, by 2013, that number tops over 1,000. And while the areas on the right from 2014 to 2016 are to date, we're expecting more to roll in here, and the final tally here is kind of subject to how they're released by the U.S. Patent Office. But we did do a keyword analysis of the patents that we do have access to on our CB Insights platform, which we recently integrated patent filings into. You can see here that if you go by keyword significance, it definitely gives an idea of where Amazon's going and where it actually has been. So if you look in the past, electronic book, content item, mobile device, display device, a lot of these echo its initiatives at the time with Kindle and also maybe its Fire phone that was ill-fated. But more recently, you can see that virtual machine tops the keywords in the last 3 years, 4 years. It's definitely up there, and the virtual machine's a key piece of technology for its AWS, which essentially is just computing as a service. So that's a big part of big data. Other new areas seem to be highlighted with cybersecurity. So there's cryptographic key and secure execution that are cropping up in its 2016 patents. But also you can see in green that UAVs, unmanned vehicles, aerial vehicles, these are an increasing area of focus in what has already rolled in. And we actually decided to take a look at the logistics patents that it seems to be focused on. So Amazon very famously, had that 60 Minutes episode in late 2013 where they talked about its drone strategy and the idea of Amazon being a drone delivery, with autonomous aerial drones as the means of conveyance. And you can see that Amazon's definitely built a lot of IP around that idea. So these are patents that include instances of logistics or UAV or shipping, vehicle, freight, autonomous vehicle. These are definitely on the rise, and you can see 2016 to date already outweighs all the other years combined, or not combined, but definitely as we see more roll in, we would expect that figure to be even higher. So very curious area that Amazon's definitely building a moat around. And looking at the CB Insights platform, especially the patents, can be a very interesting area. And we've surfaced and broken news about this fulfillment center that would dispatch drones to deliver from the sky, and basically being a blimp fulfillment center that houses drones that would fall down to houses of customers. Another one, drones that are autonomously speaking to one another and communicating in a mesh network. This definitely illustrates this logistics vision of a futuristic network of autonomous vehicles. And then also is a very interesting one that came out just I think a week or two ago in recent drawings. The fulfillment center would use robotics to assemble orders by tossing items through the air and having it land in a box. just kind of an interesting vision that seems kind of far-fetched, but also very applicable and definitely doable from Amazon's point of view. So moving into what I call the river delta, where Amazon's many businesses meet. Amazon, like I said before, is a very difficult company to get a proper idea of what it is exactly. But one way to think about it might be as an amalgamation of many businesses. So Ben Thompson of Trajectory has written that a more nuanced approach considers the fact that Amazon is not a monolithic operation, but rather a collection of businesses sharing resources, including a channel, which is Amazon.com, logistics, and a common technological foundation. And this technological foundation has definitely run throughout pretty much all of its main pillars now. But when people talk about Amazon's many businesses, people often mention a flywheel, and the idea that most of what's happening with Amazon and its many businesses is that it's, as a platform, it has the richest data on how consumers consume, how sellers sell, and how developers develop in more recent times. So this in turn allows Amazon to optimize its shopping experience, its logistics network, its developer environment, and as the preeminent name in voice AI right now, it allows it to improve its voice software. So this all in turn makes Amazon's offerings even richer. And you can see here, that users contribute more data, the product gets smarter, more people use the service, and so on ad infinitum. And Amazon's core, as an e-commerce company, definitely has a flywheel effect of its own. So Bezos is famous for having scribbled on a cocktail napkin this flywheel that it has as an e-commerce platform. You can see that as an intermediary between sellers and customers, it can leverage its lower cost structure, its wider selection into that same virtuous cycle where it just grows stronger and stronger as an intermediary. And actually, what's kind of interesting to go with this is that everyone's always trying to figure out what's going to change in the world of e-commerce. Amazon's a little bit different, and Bezos is known for flipping that question of what's going to change on its head and asking what's not going to change. And he said in an interview that it's hard to imagine 10 years from now where a customer comes up and says, "Jeff, I love Amazon. I just wish the prices were a little higher." Or, "Jeff, I love Amazon. I just wish you deliver a little more slowly." Impossible, he says. And so, when you know something like that to be true, even over the long term, you can afford to put a lot of energy behind it. And definitely improving this flywheel, getting its traffic higher, getting its cost structure down, its delivery, selection, customer experience improved. These are core initiatives for the companies even today. And as a platform of e-commerce, Amazon actually first opened itself to the world in the year 2000 when it allowed outside companies to start selling on Amazon's platform. So it realized, it had this great, well-trafficked site that has, book recommendations and algorithms and searching well available, and that a new area would be for Amazon to essentially open up its platform to the world. And nowadays, that other world, its third parties that it serves, accounts for about 49% of the goods that it ships. So behind the scenes of its marketplace, its seller services, it matches buyers and sellers in a very dynamic way, and it actually now looks more like a massive slowed down stock exchange, where it takes a fee for everything that it sells as an intermediary. And this chart here from the Wall Street Journal illustrates how even for commodity goods like a 20-pack of Duracell batteries, prices can fluctuate pretty much in real time. So moving into spotlight on AWS and Enterprise Cloud. What's interesting here is that AWS actually began as a way for Amazon to update its own systems. So it realized it needed better technical infrastructure, and when it updated itself and developed new systems, it realized it could also unlock a lot of creations from other developers if they were to open up this infrastructure as a service to the rest of the computing and tech world. And it ended up being this kind of unexpected smash hit, selling infrastructure as a service. And it now represents, because you can see here, about 40% of the cloud market right now in infrastructure and platforms as a service. But it might be full court press with AWS right now, and as I mentioned before, those last 3 acquisitions last quarter, To-Do, Harvest, and ThinkBox, these all add to its developer offerings, and it's definitely seeming to bolster it, but nobody really wants Amazon to be owning this like it does. Google and Microsoft Azure and others are definitely working to catch up right now, and it seems like they're doing all right, although Amazon's still fairly dominant. And as a revenue source, it's a significant engine for profits right now. Amazon's begun posting profits in large part due to the success of AWS. In a full year of revenue, it's doing at least $12 billion, which is several times, I think at least 4 times that of any serious competitor. And it's a significant engine for the company. There's no question. But what's interesting is that Amazon's new endeavors into making this an even stronger engine is to lower the friction for developers to be as little as possible. And this is to make the developer experience more seamless. It's allowing cloud applications to be deployed very easily with AWS Lambda, which essentially allows a developer to send a snippet of code and to be deployed and managed fully without fiddling about the details in the background. And this is a little different, I guess, more like the microservice version of its AWS. Instead of having to manage the languages and operating systems on the virtual server, it just takes care of all that, and you essentially input the code. It also has its reputation, just AWS in general has this reputation of being a startup must-have because it brings in to the fold pretty much anybody who needs computing done, depending on how much they're actually using it. And also Amazon's gone to great lengths. It actually is paying out huge subsidies just to get started. I think at least $100 a month to developers to get started. And actually, Amazon's web services has allowed Amazon to really reinvent itself and turn itself into a tech company. Brad Stone, again the author of The Everything Story, said that finally, after years of setbacks and internal rancor, Amazon is unquestionably a technology company what Bezos has always imagined it to be. So, kind of dovetailing into its big cloud services business, AI and voice is working atop a lot of that infrastructure that it's built out in computing and seems to be the most pillarable of all its newest pillars that at least outwardly visible to be in the works. And the most visible work with AI is with the Alexa voice software, Alexa voice service. So this is what's running in the guts of the Echo, the Dot, the Tap, and more recently it's opened up this to third parties. So you can see below that you can build Alexa directly into your device as a third party, and it's basically allowing developers to call and license its technology with a simple API. Even more recently than that, AWS unveiled AI as a service with Amazon AI, and right now there's still a significant barrier to entry for training AI systems, and Amazon has that training data and that technical know-how to develop solid systems like this. Like AWS, it's selling back the tools that it developed itself and opening them up to the world and the next crop of developers. And actually, you know, Amazon's done a very solid job making these essential tools available and then selling them back to the world. It did that, as I mentioned, with the retail platform when it opened it up to third parties. Did it again with AWS. The Alexa voice service is this new biggest outward push, and you know it could do for voice computing and NLP and AI what AWS did for cloud computing. And you know when it sells compute power, which runs the present and future of all things digital, it allows it to be the backbone for a lot of this AI innovation. And you know when AI has its watershed moment, Amazon Web Services and Amazon's AI as a service will be there ready and waiting. And a lot of this is echoed again in this latest shareholder letter from Bezos. He says that much of what we do with machine learning happens beneath the surface. Machine learning drives our algorithms for demand forecasting, product ranking, product deals and recommendations, merchandising placements, fraud detection, translations, and much more. And says that our AI tools can be accessed with simple API calls, no machine learning expertise required. Watch this space, much more to come. And you know, in many ways, Amazon is taken for granted as a machine learning company. You know, a lot of its innovations in early book recommendations are now standard on pretty much all e-commerce platforms. But you know, as one of the pioneers doing this 20 years ago, you know, it's hard to remember that this wasn't always the case. Also with that, you know, he's mentioning the new forays into open sourcing its tools with Amazon Lex, Poly, you know, and you know, its computer vision in addition to its NLP offerings, you know, will be very easy and very frictionless for developers to use. And so clearly Amazon intends to have AI be its newest flywheel, and it's building a family of services to build its developer and cloud ecosystems. But it's definitely the early days of AI, and I think Bezos would admit that himself. So companies like Facebook and Google have at least as much of an advantage in AI research and finding engineering talent. So this is not going to be, you know, an easy next pillar for Amazon to grab and build. But still, it's the early days. So just wrapping up, this and a lot more is available in our long form version. There we have more about the other arms in transportation, its new markets like India, its foray into brick and mortar, which is definitely a significant one, and its hardware devices and much more. And it's definitely worth your time. It's nearly 10,000 words of great research from and written by yours truly, and I really hope that you take the time to check it out. I think you'll like it. And again, any questions or comments, please reach out to me on Twitter at npappag, N-P-A-P-P-A-G, and if you'd prefer email, send me a note, npappageorge@cbinsights. If you just hold on a moment, I'm gonna take a look at some of the questions that have rolled in, and I'll see what I can do to answer them to the best of my ability. Just 1 second, please. Okay, I got another question for you here. We got someone who wrote in, is there a trend that Amazon buys companies when an industry is a bit more mature? This one is interesting. I would not say it's necessarily the case. So, what's kind of interesting with Amazon's drone initiative, for example, we haven't really heard much at all since that 60 Minutes episode in 2013. Except for maybe a couple demo flights, it's been relatively quiet, and it's building this in-house. Yet, on the wayside, there's a whole developed drone startup market and ecosystem that's pretty much blossomed. There's manufacturers all the way up the stack to startups doing just the application layer. This is a pretty big area for investment, yet we haven't seen Amazon acquire or really make any moves. So sometimes, if this is an industry that, maybe in startup timeframes is mature, Amazon's not going to bite necessarily, and also has the engineering talent and know-how, and also the incentives to make it in-house. So with drones, for example, it's got to integrate really well into its current logistics infrastructure and network, and pretty much seamlessly work like that. But yeah, I'd be curious to see what's going to happen, especially in the drones arena. Let me take a look at some other ones and see if there's some other questions I can answer in just a second. Somebody has asked, what will disrupt Amazon? What could potentially lead to their downfall? There's a number of things. Like I kind of alluded to at the end about AI. I mean, it's up against a lot. I wouldn't say Amazon's AI name, or it's not really synonymous with AI currently. I would say maybe its peers like Facebook and Google, with presence in the Valley, are much more able to scoop up probably the top talent and research, and definitely have done, much more outward-facing research. And that might benefit them in this arena, as well as, making a name for itself, as with the building of AI deep learning hardware that goes with it. Google's, building chips in-house for it. Intel and others are trying to build the next chip. Same with NVIDIA and all these others that are getting involved with the deep learning hardware. Haven't heard a lot about what Amazon is doing there, and so its name as an AI could be a threat to its future that kind of hinges on a lot of AI working. Another one, it's been thrown out there, is that the company is essentially Bezos's brain scaled out. And so much hinges on him. It's kind of hard to imagine, a company like this running without him. And it doesn't seem like he's going anywhere or anything like that. But it also doesn't seem, and I've written about this in the long form, that it doesn't quite seem that the next crop of leadership has been grown outwardly either. So a lot of it still is centralized to his brain, which is definitely a threat. And then I guess another final threat, and it's definitely been written by others out there. The great Economist article that I link in there says that Amazon could attract the ire of regulators. So as its bite into e-commerce becomes a huge dent into pretty much all of retail. Every day we're seeing headlines rolling in about retail spaces, even in New York City, just downsizing and becoming empty, and just physical retail is going out of fashion left and right. Malls are empty. As that becomes like a big reality, and its impact in the greater economy becomes so significant, it could definitely be regulated. And because it's like a tax on the internet, it's essentially there for anything done in commerce these days. its omnipresence could mean that it gets taxed like and regulated like a utility, which would be an interesting thing to see. But so far, Amazon's definitely stayed out of talks of antitrust. But I don't think it'd be shocking to see in a couple of years that kind of idea come back around. Let me see about a couple other things. Somebody's asked, what do you think of Amazon's marketing? Amazon's famous for not really marketing, very hard. I'm not sure how I discovered it. I'm sure myself. I think it was just word of mouth. Someone told me you got to go on Amazon. But more and more, I think, and as I write in the long form, its presence in brick and mortar. So I didn't really go into it in this webinar, but Amazon's increasing its presence, with its workerless stores, Amazon bookstores that are cropping up and just hitting major American cities right now, and also Amazon Fresh pickup, which would be like a grocery pickup. You could order ahead of time, and then pull your car up and get your groceries. All these kind of efforts, as it becomes more of a real world company and leverages its ability to not really need to market because you already know Amazon. It's already the central funnel for so many other goods in your life. It doesn't need to actually spend like a brand does currently to get your eyeballs, to get your your brand awareness there. So Amazon, as like a central omnipresent entity, allows itself to not necessarily need to market itself, which has kind of allowed it to be this company that you don't know much, or much at all about, yet, you go on the site all the time. Didn't get much into the content creation and media partnerships, but somebody asked, how do their efforts in content creation and media partnerships like the NFL fit into its broader strategic vision? And I think circling back to what I said earlier, winning Golden Globes allows us to sell more shoes, is a quote from Bezos. And really what that means is that if you start adding with pretty low marginal cost, you start adding services to Prime, which is a rather expensive membership subscription, at least $100 a year. There's actually two interesting facts that come up. You spend more, and you're also more likely to convert and stay within the pay, the membership of Prime. So they make revenue subscription, and they make with people who are in Prime, they make even more e-commerce conversions because you have that free 2-day shipping. So by adding and investing heavily like it has into media, it allows that engine to keep moving and to sell more shoes. Its recent content creation is actually in budget pretty sizable. So it won 3 Oscars last year, 2 of them for Manchester by the Sea. and also this year is planning to spend double what HBO is as far as budget goes for content creation. Netflix is still, I think, about over $6 billion, whereas Amazon's planning to spend about $4 or $4.5 billion. Still, that's just sizable investment into what must be a justifiable thing for Amazon, because it keeps the subscription revenue, it keeps the flywheel moving, and it's able to offer this suite of pretty elite media and no additional cost to consumers, and that keeps them coming back for more. Okay, so I'm just going to do a quick fire. There's a couple lasting ones that I don't really have a ton to expound on, but maybe I'll just say a quick thing off the cuff of what I know. Considering, let's see, what aspects of the business is likely to see the most growth in the next year, in the next 5 years? Well, let's see. I would say AWS, by all points, seems to be that revenue of or that source of revenue growth. Let's see. Considering just marketplace, price, and fulfillment, would Amazon still be a profitable business? That I don't necessarily know. More schooled in the startup arts than I am in the public tech company arts. But I do think that if Amazon were not reinvesting its profits into AWS and new fulfillment center warehouses, I mean, it could possibly be a profitable company. But let's see. And where does Amazon AWS fit in the smart city space? It's definitely in the IoT realm. It's up against, in the smart city area, up against some cloud offerings from, say, GE Predix and others that like Microsoft Azure. There, maybe it's not as well known as a big name in the IoT world, but of course it's going to be an increasing focus. It's kind of going full court press on all fronts on anything AWS right now, and I expect it to definitely be moving in the IoT space as well. And it seems like I'm out of time, and I need to let you all go. But again, please reach out. I'll be here. I'm on Twitter and Papa G, or you can email me below and Papa George at CB Insights. Wish I had more time for you, but we can interface offline. And I appreciate your time, and just want to thank you all for listening and sticking with me. And I really do highly recommend you read the long form piece when you get some time alone. I think it'll be worth it. Again, thanks for tuning in, and we'll be back for the next one.
Thanks. Sorry. Thank you.